Good morning, everyone. This is Todd Brow with Senior Insurance Marketing, and we are excited to have a new final expense product here by a household name, Aetna. Its issue ages up to age 89, death benefits 2 to 50,000, and 3 level plan benefits plus riders. But to tell you more about this product, I have Tony Clark from Aetna, and he will go through this brand new final expense product from Aetna on the Accendo paper. So without further ado, Tony, can you tell us more about the Accendo final expense product?
Yeah, I certainly can, Todd. Thanks, everybody, for joining me this morning. You folks are getting kind of, actually, our first sneak preview, if I want to call it that, of our new final expense product. This presentation that I'm going to kind of go through, we created it just the other day, yesterday or something. We have a fancier presentation that's right now in our legal department, but Todd and I were talking, and he asked me if I'd be willing to come on and share a little insight on this new final expense product. It's our first final expense product that we've had since our first one that we introduced probably about 10 or 11 years ago. And you may be familiar with that final expense product that's currently out there. It is still out there. There's no intent to replace it at this point in time. So kind of like the Accendo Medicare supplement that we recently introduced, in addition to our current Aetna Health Life Insurance Company, whatever Aetna entity we're selling Medicare supplements in any given state, the Accendo Medicare supplement is just another entity. It's just another product that, same plan offerings, same everything about it. The only difference is that it has the Accendo name. And much like this final expense product, it is the first, another product that's actually, if you want to say, co-branded with our new owner, which is CVS Health and Aetna. So again, the idea is that this is not replacing that life insurance policy that we have out there, but this new one's got a few different twists to it, which I think you're going to really like, especially for those of you that have been selling final expense. And if you haven't, take a listen to some of the benefits. Now, this isn't a real long presentation that I've got built here, but I know Todd, I think, is going to be fielding some questions. I think everybody's on mute. Just to try to keep some of the noise down, and that's good. So
yeah. If you do have questions, there is a Q&A section in the webinar here. So just feel free to type in the questions, and we'll be happy to answer the questions live here as well. So yeah, go ahead, Tony.
Right on. Yeah, that's the best way to do it. That's how we do ours too, and we'll see if we have some questions. And again, you may not have a lot of questions right now out of the chute, but again, this product's just launching or has launched, and I think it's pretty exciting. We've got, I think there's about 16, 17 states initially, and then we're going to have another batch. There might even be 23 or so. I can't remember the exact number, but we'll have more states rolling out on the final expense. So anyway, let's just go ahead and jump in here a little bit. Let me give you a kind of a lay of the land right now. I guess you can see this map, and we've got it kind of doctored up here a little bit for those of you that are either viewing the presentation or if you're listening in. But you can see the states in red are our Tier 1 states. So those are the states where we have launched as of June of this year. You can see how we kind of have them tiered out. You can see the lighter gray is Tier 2, and so we'll have some more, depending on where you may be selling at. And then we've got Tier 3, and then Tier 4, which is the black one, which is, like New York. That's probably not a state that we're going to have anything in. Probably, I don't want to say ever. I thought it was kind of interesting. One of the states that we've never had a product offering in, at least on the senior supplemental insurance side, which is where we do our ancillary products like our cancer, heart attack, stroke, our DVH, and so forth, is I do believe there's a good chance we're going to be having this new Accendo final expense product in Washington State. So if anybody happens to be out west, or if you're in a situation where you're like in a call center or you're selling across the country, that could be, for us anyway, that would be a new place to play, a new marketing place. So again, there'll be more states coming. Florida's a little tough. I know we get a lot of questions about Florida. It's a great market, great state for us. But currently we can't do anything right there at this particular point in time. We only, as far as the company, we have a health license there. We don't have a life license. And Florida does some things a little weird, a little different down there through their DOI. So we are working diligently at rolling out or getting it available, getting our license down there so that we can actually sell the final expense. I know that sounds a little weird. You'd think as a company, why wouldn't you have a life license in Florida? And somebody said the other day, they said, well, I think it was just yesterday actually, they said, well, just quite frankly, it's tough it's the way they do things down there and the way the app and stuff that you do is set up, it's just a little different. So, but with that being said, there's a lay of the land. You can see what's coming, and hopefully we'll have a lot more of these rolling out, and we'll get things going. So, if you don't know or do know, I don't want to beat a dead horse here necessarily, but, we used to always say that the average funeral cost right now, around this day and age, is around $10,000. That's kind of the recommended amount. It's kind of like cancer insurance. If you're buying lump sum cancer, a lot of times they say, about $10,000 is about, is the happy median there. But right now, statistics showing that the average funeral is right around $7,360 or more. And I think most of the time, if you've ever had any experience, having to deal with a funeral home, they have these various packages and things like that. And I say package, I mean if you get the, depending on the casket and depending on the flowers and depending on the transportation and so forth, they kind of bundle things up and you can get different levels. I don't really want to say it's, like bronze, silver, and gold, but it's something similar to that format. And one of the other things that we also have in here too for you to use is, let me hold that thought for just a second. So then we know Social Security will pay roughly about $255. And again, the main thing is it's for qualified dependents for funeral arrangements. There are certain situations when you run into people that, for instance, could be on Medicaid. There could be some stipulations where that money is not even paid out. So that's when it's only $255, it's not nearly enough to actually. And then again, $300, amount if you're Veterans Administration for funeral arrangements. So with that being said, one of the nice things that we will have in our sales kit is something similar to what we have in our older, our existing final expense product, and that is a buyer's guide, if you want to call it that. It's really some kind of I guess technically I call it a buyer's guide. It's really not a buyer's guide. That will be in there, but I'm just drawing a blank on what it is I want to call that. Darn it, I'm just drawing a total blank on it. But basically what it's going to do is it's going to walk you through, the recommended buying amounts and so forth. And I think one of the nice things about it is that whether you're familiar with how, this if you want to call it final expense or burial insurance is out there, or how you sell it, it is something that we can help you with. And one of the goals that we've taken, when you look at our brochure, we've tried to lay out some great things to keep in mind. And that could be things, just like someone's debt, someone's household expenses. There's, and I say debt, I mean, that could be like credit card debt, car payments and different things like that. But all those types of things that you might want to have or keep in the back of your mind or talk with your client on, because that's going to help you then determine, inflation is even another one that they talk about, because what you buy today, depending on the face amount, may not be a lot, the same amount or as much as you need should you live, 20 years longer or something like that. So again, inflation, debt, household expenses, et cetera, it's going to help you walk through that. And so I think that's very beneficial in there, because if you don't have that, I think if you don't lay it out to the customer, to your potential buyer, these are the things you need to think about. A lot of times they don't think about those things. It's kind of like when you buy a cancer policy, and if you need cancer treatment, and you need to go off to some specialist, some hospital for the treatment, your bill, and you're going through chemo or whatever it is, you know, your bills, your credit card bills continue to come in. Your house payment is still needs to be paid. Your utilities still need to be paid. So it's much like life insurance. There's a lot of things that you can incorporate in there. And if a person actually really feels like they've gotten adequate life insurance, maybe they want to leave it as a legacy. Maybe they want to leave a donation to the church. Maybe they want to, you know, leave some for, you know, grandchildren, for college funds. But you'll be surprised at the number of people that do not have adequate life insurance, and a lot of them don't even have anything. I know I've talked to several people where they said, well, you know, I've got a $3,000 policy, and you know, and that's something, and that's sure better than nothing. But at the end of the day, it's going to cost, you know, you're going to have to pass, when you do pass, you're going to have to literally pass that burden on to family members to come up with the funds to cover your funeral. So you can circumvent that and make things significantly easier, if you want to call it that, because obviously they are having to deal with someone that passed away, and that's not easy. But you can take a little bit of the concern away from them if you do have final expense. So let's get in here and talk a little bit about the plan offerings. This is a little different twist. While there's some similarities, but there's also some different twists here. And you can see we have a level plan. It's the full face value from the policy issue date, regardless if the death is due to an accident or natural causes. So that is just essentially out of the same page or same book. If you're familiar with our older or our existing final expense policy, that's exactly how that works as well. Now, one thing you'll notice below that, for those of you that can see this, the level benefit amounts do vary. The policy, as Todd mentioned, you can start selling at age 40. And it does go up to age 89, but you can see that there is a minimum death benefit of $2,000, which that is $1,000 less than our current one. It started at $3,000. So this gives you a chance to sell a $2,000 minimum, but you can see the maximum. So if you're between 40 and 55, the maximum is $50,000. Between 56 and 65, it's $40,000. 66 to 75, it's $30,000. And 76 to 89, it is $25,000. Now, with that being said, if you're going down, and I've got kind of a screenshot a little bit here of some of the questions coming up, and you're probably wondering, well, how do I know if a person qualifies for a level plan or a modified plan, et cetera? Well, it's simply based on how your client asks yes or no questions. There's also a modified option. Now, this works a little bit different because obviously if you qualify for the modified plan, you're a little not quite as healthy potentially. So it will have the full face value immediately from the policy issue date if the death is due to an accident. So that's always a given that if somebody does die of an accidental death, our policies, all of them, pay out the full death benefit. But here's where it changes. If it's a non-accidental death, so if the person just dies of natural causes or dies of cancer or dies of AIDS or whatever it could be, maybe, during the policy year 1 and 2, what the policy beneficiary will receive is 110% of the earned premium. And then starting year 3, it will pay the full death benefit. So again, if you're familiar with our old product, it's somewhat similar to how that worked. The old product, we had a level, modified, and graded option, and we still do because, as I mentioned, that policy is still available. But this one just offers a level or a modified plan. Now, if someone does fall into the modified plan, okay, you'll notice modified benefit amount, it's a little different. The issue ages still start at age 40, but the maximum age, if you should fall into the modified category, is 75. So what you can piece together there, obviously, is that if you are an older adult person and you are, let's say, older, let's say you're 76 to 89, and you do not qualify under the level plan, you would not qualify under the modified plan because the cutoff date is 75. Okay, so very similar. A lot of these final expense plans are built somewhat the same, or a lot of similarities when you look across the board. Now, one of the things that we have that's also, I don't know why it says benefits not offered with Aetna final expense. I know these were not offered with our old or our existing final expense product, but these 3 riders are available for the level plan only. I say 3 riders. There's the accidental death benefit rider, which pays up to 50% of the death benefit if the physician provides a written certification that the insured has a medical condition that will result in a terminal, chronic, or critical illness with a life expectancy of 12 months or less. So that's something new for us. We have never had that offering before. I think that's that's something that we can you can look at as an extra tack-on sale, if you want to call it that. Again, it's a rider. If someone qualifies for the modified plan, they are not going to be able to get this accelerated death benefit rider, or they're not going to be able to get the children's term insurance. Now, the children's term insurance can be for children, also grandchildren, and I like that. I like that because, again, you have some people that grow up with grandma or grandpa or something, or they're raising children, and this is a way for them to tack on a child's term life or term insurance rider as well. And it provides coverage through the age of 25, and they can do it. You can buy it for a child, stepchild, legally adopted child, or a grandchild, and it's available in $2,500 increments up to $10,000 per child. It's limited to 9 children, and the amount selected will be the same for all. And I like that feature because that's, I don't know if it's really a carryover, but it works very similar to our cancer policy. I refer to that because when you sell our cancer policy and you sell a full family, everybody in the family gets the same face amount. It's not a reduced amount for the children. And that's how this is too. If you purchase, like a $5,000 policy for each one of them, and you have 3 kids or 4 kids or 5 kids, everybody's going to get the same. Children can be added at ages 31 days. So once they turn 31 days, that's the earliest they can be added, through the age of 18. And then, of course, as we all know, they can continue to stay on the policy till they're age 26. And then at that time, they can actually convert it to an individual policy if they'd like. Now, one of the things you're going to see on here too is, and this really isn't a rider. This is actually what we call the super preferred rate. And this is cool from the aspect of this. A lot of you folks out there might be writing or have been writing Medicare supplements. And if you've written, whether it be an Accendo Medicare supplement that I was talking about earlier, or any of our Aetna entities, if you have a client that has actually been through underwriting and it's been within the last 180 days, and that's with us, with an Aetna entity. Can't be sold to an underwritten policy to another carrier, but it has to be with us. Your client will then get 10% off their rate for the final expense. So that's a neat way for you to, if you're going in and you're talking to a client about Medicare or supplement, and you're able to, let's say they did have a policy with another carrier and they were going to be underwritten. If you talk to them about final expense now, this Accendo final expense, you can actually tell them, and hey, by the way, you do qualify for what we have, a final expense. Again, you'd have to qualify because you have to answer the health questions, but still, it's a great way for you to tie the two together. And hopefully increase cross-selling opportunities out there. So that's something that, keep that in the back of your mind. And that's a good point. It says, unlike Aetna final expense, many of you may know that on our prior, I want to call it still our existing final expense plan, we still do not pay commissions between the ages of 40 and 60. The cutoff's 59, so starting at 60, we do. So 60 to 89. This one, we will pay full commission all the way down to age 40. So that's one thing that we actually fixed. We were able to correct some things that weren't quite right in our existing policy back when we first launched that. And so we have now addressed that, and that has really helped a lot with that older product. Again, not a darn thing wrong with it. It's a great product. It's priced like it should, and it's designed like it should be. So it's nothing wrong with that. But this one, again, you can see with having the super preferred rate. And there's another rider that she didn't add on there that I need to see if I can open up before I let you guys go. I'll open up the brochure. But, you know, so, and I'll show you some of the brochure just for you to see it, what it looks like. But here's a copy of the actual questions, the health questions, and it's very streamlined, very simple, and it tells you exactly, you know, for instance, under Part A, if you answer yes to, let's see if I read it correctly here. If you answer yes in Part A, you are not eligible. Do not complete or submit the application. So while this is not a guarantee issue plan, I like to refer to it as a simplified underwriting plan. So again, you've got your questions there, like are you currently confined, you know, in a hospital, a nursing home, a skilled nursing facility, etc. You can go down through there. You know, if within the past year, have you been advised to use oxygen equipment to assist with breathing, except a CPAP for sleep apnea, or have been advised to have a kidney dialysis, etc. So they're pretty straightforward, pretty straight, you know, right to the point questions. It's either yes or no. If you scroll down or go over to the right-hand side of the page, you'll see Part B and Part C that are highlighted there in yellow. And it tells you right there under Part B that if you answer yes, if any yes answers in Part B, select the modified plan. Okay, and then C, if yes answers in Part C, select standard level. If you've answered no to Part A, B, and C, then you can get the preferred level. So you can see when you're even running a quote online on our quote and enroll tool, for instance, if you like to use e-apps, which hopefully you do, this can make your life really easy. We've got the security question on here, makes it very simple, so it ties in right. You know, again, you'll be able to do something more like on the order of a shopping cart experience, where if you want to package both the final expense and another product, for instance, you know, if it's a MedSup or if it's a you know, nothing saying that you can't take somebody that's, you know, you're writing a Medicare supplement on, they're turning 65, they're in their open enrollment period, and you talk to them, you know, about a final expense product. Now, they're not going to be able to get the super preferred rate because they're not being underwritten, but it's still another way for you to tie that in and say, hey, here's something we should talk about. So again, if they go through and they answer all of the questions no, you're going to know right then and there that they are going to be able to qualify for that preferred level plan. So that in itself, if you ask me, I think is pretty cool. I want to see if I can open up something here before I let you go. This here. Okay. Todd, are you still there?
Yes, I'm still here.
Can you still see my screen?
No, I cannot now.
Okay. I gotta figure out how to get back here with my.
And we also have a question: is it available in District of Columbia?
You know what? Whoops. Let me go back here. I do not believe at this particular point in time it is available there.
Okay.
That's a good takeaway, because I don't think that was high. You know, I don't know. I have not. You know, it's funny you should mention DC. That's a good question. Let me follow up on that, Todd. And okay. If I can get back to you, maybe you can get back to the person that answered.
Yep. I'll get back. Yeah, I'll get back to the individual.
Okay, I'm gonna make a note right now as we're going through that. Great question. Yeah, because that's I don't remember. And I'm just thinking through the states I saw us releasing this in, and I don't recall seeing DC anywhere. So, can you see my screen now, Todd?
Yes, I can.
Okay, great. I don't want to drag you through this whole thing, but for those of you that can see this, this is kind of what the brochure will look like. And, you know, it's got the great thing about it, like our Accendo Med Sup, it's got the CVS heart on the front of the brochure. So that kind of lets them know, and you can see the logo here at the bottom of the brochure, CVS Health, and so forth. So that's kind of a nice way. I mean, we're a Fortune 5 company, so, you know, you not only do you have CVS. I thought it was interesting. I'll share another little tidbit with you guys and gals. This Larry Merlot, who's the head, the main guy, the CEO, president, whatever of CVS Health. You may see him on CNN and different places like that. He shared with us a while back. He said 70% of Americans live within a 3-mile radius of a CVS pharmacy. And I thought, wow, that's kind of interesting. 70% of Americans. That's interesting. I kind of mind-boggling in a way. I think about where I live, and I'm not 3 miles from a CVS pharmacy, but apparently 70% of people are. So again, got a little. Oh, and I'll share something else. And Todd, you probably don't even know this either because I just learned. I'd heard this, but I think possibly or potentially coming up around August, if the timeline holds, our clients or your clients that you write Aetna products on, like Medicare supplements or final expense, they'll actually be able to go into a CVS pharmacy and pay their premiums with a credit card.
Oh, wow. Did not know that.
I know, that's pretty cool.
Mm-hmm.
That's something we've been asked for a long time is, can I pay my premiums on a credit card? We don't do it now. I mean, we can't do it now, but if they get, obviously there's a system in place or something being placed. I don't know if that means that in the future as well, that'll be an option instead of just doing electronic fund transfer or a direct bill, that we'll be able to actually take a credit card or a debit card. But I think that's pretty cool technology to, you know, if somebody wants to go in and just pay their premiums at a CVS pharmacy, they can. So I don't know how many people will want to do that, but you know, that's going to be an option. So you can see your planning for today. I talked about the burial versus, well, the different, there's the information there. Social Security benefits, $255, Veterans Administration, $300. You see the difference in the other things. I want to go down here too. Here's where I was talking about, probably scrolling too fast, but how much coverage should I buy? Household expenses, debt, funeral costs. You can see here the inflation. It actually gives you the math on examples on how to calculate it. I mean, for those of you that would like to do that, obviously, you know, it's not anything that, you know, there is an annual policy of $40, and that is an annual, like most final expense. Unlike our Medicare supplements, for those of you that write it or where there's a policy fee, it's a one-time policy fee like of $20. Life insurance tends to work differently. So there is a $40 annual fee that is calculated into those rates that they'll pay every year. But here's the snapshot of what I was talking about there. Now there's the third rider. So there's an accident. She left one off on me. There's the accelerated death benefit rider that I talked about, but there's also an accidental death benefit rider where it pays 100% of the base policy face for accidental death. So it's a way to, you know, beef that up a little bit. And then you can see also there's the children's term insurance rider. So again, the benefit riders are available only if somebody qualifies for the level plan. It has all your regular cash value flexibility, your reduced paid up insurance, extended term insurance. It builds a cash value. It is nothing more than a whole life insurance policy. And you have your automatic premium loan for your extended term insurance grace period, non-forfeiture options, reduced paid up. So again, that's really the brochure, and that's going to hopefully, you know, it's got a little bit of good information here with the different types of history, if you want to say that or whatever, CVS Health. So serves an estimated 39 million people. You know, and that's interesting because that probably, I'm guessing, the CVS information here, you know, obviously it contains the CVS. If you add in what Aetna has done and built over their 168-year existence, boy, what a great team. You've got CVS Health, and then you've got Aetna in there too now. So I'm going to scroll back up here. I'll leave this up here somewhere. I don't know where a good place to leave it is, maybe right in here or somewhere or something. So, all right, with that being said, that's really all I have. We'll have some, I will share with you this. We will do and be featuring through our AetnaSeniorProducts.com. We'll be doing, I'm sure, a lot of webinars that will have our full-blown presentation. I tried to kind of take out the meat of the presentation stuff that we would probably talk about, and I had the gal that works for me actually put this together yesterday, and so again, hopefully you get a little bit of a feel on how this works. So with that being said, Todd, do you have some questions there?
I do not have any questions. The only one is if it's available in DC, and you were going to check that out and then get back to me, and I'll get back to the individual on that as well too. So yeah, definitely. So
yeah, that's great. That's a good question, and I know we're going to be, like I say, we're going to be rolling out more of those. And and one other thing I'll put on there for the folks that are still in the line that haven't given up on me yet. And this is kind of interesting. This is the first time we've done something like this, that the premiums can be matched up now to when the applicant actually, or I should say their premium due date, can be matched up to when that client gets their Social Security deposit. We're not going to take the money, the premium, out of their Social Security money, but they can match it so that they can actually, if they get their money on the 6th of every month, you can actually match this and have an effective date or their payment date on the 6th. Obviously now the one thing you can't do is if somebody were getting their money, and I don't know if it happens or not, honestly, but if they're getting their money like on the 30th or the 31st of a month, because we don't always have months with the full 31 days or 30, it varies, you can't go out that far. But that's a feature that you'll be able to, again, they'll be able to have their payment withdrawn from their checking account the same day or the same time frame that they get their Social Security money. So I think that's a little something extra that we haven't done before too. So we tried to think about outside the box. Be sure to get on there. If for those of you that want to kick the tires on our e-app when it comes to this final expense, when you log into AetnaSeniorProducts.com, and if you're using e-apps, you probably get this already, but you'll notice where you go to click on the quote and enroll tool, there is a little link there that says Sandbox. And that Sandbox is there that if you want to get in there and just play around and do some, play around with, answering the questions and putting things in there and face them out, $10,000 or $20,000. Go through the questions, see how once you go through the questions, depending on how you answer those, how it'll show you what plan, in what rate you'll get if it's for instance, if it's the super preferred rate, if you answer no to everything, and you've had an underwritten Medicare supplement. The other thing I found out yesterday too, to share with you, don't worry about finding out what that client's policy number is necessarily on their Medicare supplement if they've been underwritten in the last 180 days. We will obviously, they're with us. If they get qualified for the super preferred, if that's what you gave them, we'll be able to access that and find it. So you do not need to put that on the paper app, or if you're doing the electronic app. If you have it, I'm sure it won't hurt anything to put it in there, but don't go out of your way if you don't need to.
And that's a huge benefit as well too for that super preferred. So if they have a Aetna policy in the last 180 days and they can get a super preferred rate on their final expense, that's huge too.
That's right. And make sure you remember, it's got to be an underwritten Aetna entity. It has to be underwritten. So if it's open enrollment or guarantee issue, I mean, they can certainly still buy the final expense, but they're not going to be able to qualify for that super preferred rate. Yeah. And one other thing I'll add too, speaking of super preferred, I don't know if I mentioned this already. If somebody, somebody actually asked this question yesterday, and I thought it was a good one. If somebody actually, they have an underwritten med supp in the last 180 days, or maybe you're doing it as you're doing it right now. It's being underwritten. You're going to write the final expense to get the super preferred rate. And if something happens that, let's say they, for whatever reason, they drop their Medicare supplement with us, they do not lose the offset on their final expense policy, the 10%. They will continue to keep that. because when they bought both policies, they qualified medically. We're not going to take that away from them should something happen to their Medicare. And I know the way people tend to move around. We love it, people to put their business with us and leave it. Persistency is important to us, but things happen. And so if you have a final expense with us, or that client does, let them know that if something happens with their Medicare supplement, that they do leave Aetna, they can maintain their final expense and keep their discount.
Okay, that's good too. Good.
Yeah. So,
awesome.
Yeah, so that's about. Sorry, guys and gals out there that go through this. It's kind of a crash course. It's really the first time I'm kind of all over the board. It's the first time I've had an opportunity to talk about this since we rolled it out, as far as webinar format or meeting format. But again, we're going to have a lot more webinars coming up that will be, probably have a lot more stuff in them, if you want to call it that, kind of, the typical webinar thing. So I appreciate you hanging in there with me if you're still there. And, if you do have questions, feel free to use our agent services. But most of all, Todd, I know this is all new to you and your team there. But you're going to have questions, but feel free to reach out to Todd and his team there. And if they can't help you, they know where to go between myself and Dan Memory and Tanya Addison. We're here to help out. So just let us know as questions come up. Awesome. And I'll check on PC and get back to you, Todd, on that.
Okay, that sounds good. Great. Well, hey, thanks again, Tony. I know it's kind of just launched, matter of fact, last Tuesday. So thanks for kind of putting this together for us and for our agents to know more about the Accendo final expense. Great product, great features, and also a household name as well, too, behind it as well. So again, if you're not contracted, give us a call. We'll be happy to get you contracted so you can write this.
Hey, Todd, that's a great point. That's a great point. I should have said this, and even I don't know if you know this, but we are automatically setting people up that if you're currently appointed for final expense, and typically if you're appointed for MedSup or any of our products, you're appointed for all of them. We're going to automatically appoint everybody for the Accendo final expense as well, just like what we did for the Accendo Medicare supplement in states where it's out.
Okay. So basically,
if you're already appointed with us, that should be automatically added. The only thing you're going to need to do is if you're new to us or new to senior insurance marketing or what have you, then it's just the normal contracting process. But we would set you up for all of our senior supplemental insurance policies, so the DBH, the short-term care, etc.
Good. Perfect. Well, yeah, definitely. If you're not contracted with Aetna, give us a call here at Senior Insurance Marketing, 877-800-3080. We'll be happy to help you out with getting you contracted so you can sell the final expense plus the Medicare supplements and all their other ancillary products as well, too. And if you have any questions or need a quote, call us as well, too. Also, this is going to be the Accendo final expenses going to be on the CSG quoting tool as well. So you can go on to our website at simkt.com, click on get a quote, and be able to quote the Accendo final expense as well. So Tony, hey, thanks. I appreciate you kind of putting this together and so we can learn more about the Accendo final expense. And again, thanks. I appreciate it, Tony. And
you bet. Thanks for you guys inviting me, and thanks to everybody out there for getting through one of the toughest times we've ever seen in our business. Our business is good thanks to you folks that have learned to adapt to new techniques, using e-apps, phone work, webinars, Zoom calls, whatever it takes. We appreciate everything you folks do for us, and I hope you're all being safe and having a very successful time during this weird pandemic crazy thing we're going through. So thanks again. Take care and stay safe. We'll talk to you all later.
Thanks, everyone. And be sure to give us a call here at Senior Insurance Marketing, 877-800-3080, because we are here to help you grow your business. Take care, everyone. Have a great day.
Thank you.